What's up, guys? JJ Fade 23. I'm not a financial advisor. I'm just going to do a little trade recap about my trade we took in the room on coin. Guys, as always, I start from the weekly chart, work my way down, top-down analysis, right? Weekly chart. So what am I looking at? All right. A long flat base here. I call this an accumulation pattern. The stock proved that it could not go any lower. Now, I wish that I saw it right here. Break out of the accumulation pattern. First pull back to the weekly 2134 and a pivot right here. So a breakout retest plus EMA support. I'm all about that. But that's fine. We had the first pullback to the weekly EMAs. Now we made a higher high, right? And now we have a second pullback to the weekly EMAs, which is also identical to this. Look, guys. Breakout level, retest EMAs. Breakout level, retest EMAs. This setup and this setup are identical. This is a breakout, retest of the 21. It even did a fake breakdown right here. This is a breakout, retest of the 21. It even did a fake breakdown right here, right into the 21. All right. So that gets me excited to see it when it's coming back down to this level here. Coming back down towards the weekly 21. I didn't even buy it on this because I didn't even see it. If that was a long extension, guys, remember, I get in either on extensions, fast sharp extensions down to my level, or patterns at my level, squeezes. There's a few different ways, or triggers, right? Or I wait for a secret setup. So this comes down to the weekly 21. Now, if you go switch to the daily chart next, right? I'm doing the same thing. We see the accumulation base. It's just a little more sloppy looking, obviously. Same thing right here. Guys, look. Here's the level, okay? Let's take away this accumulation pattern. Here's the pivot. Okay? This right here, look at this. This right here is your main pivot that we're watching right here. $115. This right here is a small support level, but look at this. When it goes below the support level, hits the main pivot, then reclaims, that is a fake breakdown trigger at or just above a key level. Obviously, this is a flag. We have a pull, we have a flag, but I don't wait usually for like flag breaks, because flag breaks to me are more like, is it right there and it breakdown? Is it a breakdown retest, or do I move it over here now? I don't really trade breakouts because the risk reward isn't as good. All right, I don't trade breakouts. I don't trade flag breakouts. I don't, unless it happens in such a tight range that it still gives me sick risk reward. But I prefer to trade it right at the level on fake breakdowns or secret setup or a pattern that I see on a smaller time frame, right? So as you can see right here, we had a fake breakdown. If you're looking for a double bottom, this is even better. It comes down to the level. It doesn't quite get to it, so you're waiting still. It comes down. It goes below it, reclaims this level. That's a long. All right? But that's not what we're talking about. We're talking about up here. But remember, look at the pattern that it made here, okay? Now, again, look. We know we're at the weekly 21 right here. We also know we have a breakout retest. Same exact thing as before. Now, look. All right? We have the same exact thing. We have a level of support made. It breaks below that level, comes right down to the pivot, and then it reclaims that level. That is a long. We have a fake breakdown trigger at or just above a key level of support. We also have another flag pattern, right? We also have a pull and a flag. So I didn't take this right here because I didn't see it still. All right? But I know now when I did see it, okay, I know we're bouncing off the weekly 21. I know we came back to that pivot. We did a fake breakdown trigger right there. So when did I see it? Well, next I go down to the hourly chart. This was Friday that I saw this on Friday. So Friday, I'm watching the hourly chart. We have stacked positive EMAs. We're in a squeeze. I'm not trading the squeeze setup here, but I'm aware that we're in the squeeze. Also now, if you zoom out a little on the hourly chart, look, we broke out of the downtrend here, okay? Broke out of the downtrend. Guys, by the way, I always have my pre-market data off on the hourly in the 10-minute chart. It just makes it way cleaner. It makes the EMAs way less tangly, way more fake moves, much more solid moves. So what do you expect Much more cleaner moves. When a stock breaks out of the downtrend, great, I would have loved to buy it right here or right here. Once I saw the fake breakdown, I would have loved to buy that right there. And if I missed it, guess what? I'll buy the high or low. Next best thing for risk reward, right? Buy it right here with my stop right here. Especially this is back right at $200. Big key level. It held, you know, that would have been great. But whatever. I didn't see that. So once it broke out now, like I said, I don't buy the breakout. I'm waiting. It breaks out. I start to see it. Okay, I want to retest this trend line now. Ideally, what happens when a stock breaks a downtrend line? It comes back down and retests the downtrend line and then goes. But obviously this has EMA support right there, so I'm like, I don't know if it's going to actually break down. So now, once I know that, okay, I like this setup, we broke the downtrend, we have EMA support, you know, we have the flag pattern support. Now what am I doing? Zooming down to the hourly chart. Same thing. EMA stack positive, fake breakdown. But I'm trading off the 10-minute chart on large cap, you guys. So what happens here? 10-minute chart. Stock opens Friday. Now I know, boom, we spike away from this level. As soon as it pulls back and starts to flag right here, right on top of the 10-minute EMAs, I longed it. As soon as it started to curl right here, I put my stop below 221. Because now, guys, look. Now we have this flag right here, right? We're curling up. Don't get me wrong. I was a little nervous once I saw how hard it rejected the, well, not nervous because I know my risk is in control, but I thought, honestly, I thought I was going to reject that for a second because come down. I was like, oh, shit. But that, honestly, after a fake breakdown like this, after this kind of fake breakdown of support at these key levels, this should break out. Remember, I always talk about trading shoulds, not coulds. All right? This flag pattern after a fake breakdown should go higher. Now, of course, anything can happen. It's trading. It could just reject this. It could have came back down here. Whatever. But all I care about is taking actual setups from my playbook that I have rules to follow, and I had a target and I had an entry on a fake breakdown trigger at a key level. So once I saw this pop and pull back, again, guys, look, we spiked, and I'm always trying to buy. If I'm buying pullbacks, you guys, I'm always trying to buy in the 61 to 78% fib zone because that gives me close to to the low if I'm buying at support or resistance, right? I saw this thing dip down here, but I waited till it start to curl because, guys, if I'm buying the flush down to the 61 to 78% fib, buying the higher low, that means I have to risk off the low, okay? So that right there ended up being about, you might have the risk of about $5. But I didn't do that. I waited a little more until it started to curl. Once I saw this big spike and come back down, and then it started to reclaim again, then I went long with my stop here. I figured that way I would get a little tighter risk. If I bought it at the 61 to 78% fib, like I said, I had to risk $5 to the true stop. Because you don't want to stop out before the true support. If you buy it right here and then you put your stop right here, you're just stopping out for no reason. People do that all the time in trading. They choke out their trades. They put stops too tight. I mean, John Carter used to say this all the time. A lot of people's trading problems can be solved simply by doubling their stop. Because you try to catch the bottom or you try to catch the top. You get in right here, then you put your stop right here and it stops you out. Your stop needs to go at a true place. A true place the stock failed or held from. All right? So let's say right here, this is the true place of field. If you're shorting this pop right here, your stop should be up here, really. Unless you wait for a hardcore rejection, then put your stop above here. But, if you're shorting while it's going up and you try to top ticket and then you put your stop right here, that's just stupid. Your stop is in an irrelative spot, right? So for me, the two main spots are right here. That's where my stop can go, right here. That's one place it can go if I'm trading the high or low setup off the fibs. Or if I'm trading a flag pattern intraday on the 10-minute EMAs and it starts to curl. Now, I jumped the gun here. I didn't wait for the breakout over these levels. But if you wait for the breakout either over this flag pattern right here or the break to new highs, then your stop can go to the last pullback. Now, I jumped the gun when I saw this candle be super strong, even though it wasn't on a lot of volume. But I saw this big bullish candle. I bought it, put my stop right here. Because now, at this point, once it's starting to break this way, it shouldn't come back and fail below that. So basically buying it around $224, risking $3, and as you can see, all I care about is risk reward. $227, $230, $233, $236, already 4 hours. I took some off up into the resistance level here, but still holding the rest. But point is, guys, having valid setup with good risk reward entries, right? That's all there is to it. I mean, nobody really knows what's going to happen, but this had, guys, the other thing is too, right? I mean, with all the Bitcoin hype and all that shit running and doing this, coin's been pretty strong. Guys, a lot of people make mistakes of always trying to do the opposite of what the stock is telling them, right? It's like NVDA, not to change the subject, but like NVDA, for example. NVDA had an amazing, amazing setup, which I was long on, and I kind of kitty-catted my entry and my exit. I mean, I kind of kitty-catted. It's still circled right here. We bought this. Strong move up right here. Flag off the 8. Perfect consolidation pattern to enter on with EMA support and a breakout retest level right here. Same idea. Broke out of a previous price action zone. Sitting right on the pivot, right on the EMAs. I think I sold some, and then I don't know. I don't know what happened, but I definitely didn't trade this good, and I'm not holding up here still, which I wish I was. The point is, you guys, right? You have a giant squeeze. It's fight. You have EMA support. The point is, NVDA's been super strong. So trying to short it all the time instead of just going with the trends is just asking to get crushed. I mean, it's just do what the stock is showing you, right? It's uptrending. It's making higher highs and higher lows. Higher highs. Just trade the setup. I mean, look at this. Look at this right here. Breakout, retest, flag sideways, right on top of the pivot, right on top of EMA support. You drop down to the hourly chart. Look at this. Look at this squeeze. Right on top of the EMAs again. You can see all the bottom tails getting bought up, get bought up, get bought up. What a sick long. And if you missed that one, it gave you another chance right here and even right here. It's the same kind of setup. Look. Flagging on the 8, flagging on the 8. Right? Right here again. 943. Go to the hourly chart. Look at this. EMAs stack positive. It's just don't try to fight what the stock is showing you. These stocks can just go and go and go when they have like a lot of hype and everybody's talking about them. They keep having good earnings. They just go and go and go and go and go and go and go. And, you know, basically just trade with the trend. Look for good risk reward entries. And don't make your setup so complicated that you don't even know what you're doing. Right? It just will make you crazy. I would basically on NVDA, right? You have like same ideas over and over again, okay? Like, look, big move up, flagging off the 8, flagging off the 21. After it breaks through the daily EMAs, what does it do? Look, comes back down close to the weekly 21. First pullback of this whole move back to the weekly 21. It rips again. They just can keep going. Look at this. And you use these. Look how stacked positive the weekly EMAs are, right? Look at on the way up here. Look at the EMAs. You don't want to short against this. You just don't want to short against these kind of EMAs. You'll get crushed, right? The only places that I short against these kind of EMAs is when the stock shows me it's dropped far. Like not right here, not right here, not even right here. Nope, nope. Right here where it fell all the way through the 50. Okay, maybe I'd try a short if it ripped back up close to this high. You know, right here, fell through the 50 again. Okay, I'd put my fibs on. Right here, I want at least to go to the 78% fib where I know I have good risk reward. Okay? So look, 61 to 78 is not bad, but you look, 470 to 504, it's too much risk. I would have wanted it real high. Or right here on a fake breakout of the highs, yeah, I'll short that. But, you know, only for a pullback. Not going to try to short it right here and say, oh, I want it to come back to 300. No. The weekly EMAs are too good. The daily EMAs are too stacked positive. You just, you know, you don't want to fight that shit. You'll get smoked in the long run. So now, look what happened. Gapped up on that news of the split and everything, and now, guess what, you guys? Big move up, rising wedge, which I literally fucking was watching this, and we talked about day one might end up in the top and tail too of that big gap up, but I missed it. He even gave you a fake breakout of the rising wedge and a decent pullback to the 10-minute EMAs. But guys, if you're following the trend, the trade right here is, look, it pulls back close to support. It gives you good risk reward. You have stacked EMAs on the 10-minute chart. It gives you a hammer candle entry right here. Look at this. The only thing you should be doing right here is buying this hammer candle and putting your stop below the support right here. Boom. Closes, you buy it. 125, put your stop. 10-point stop. Guess what? 135, that's 1R. 145, that's 2R. 155, that's 3R. Oh, you already just made 4R on that trade. And it's probably going to gap up friggin' Monday. I mean, Tuesday, whatever. But it doesn't matter what it does because the setup is here. We have a breakout day. Guys, how many times do I say this in the room? when we have a breakout day like this, whenever you have a breakout on the daily chart, okay, it's going to gap up far from the 10-minute EMAs. The stock's going to gap up far from the 10-minute EMAs. The first pullback to this band of 10-minute EMAs, and most of the time it goes to the 2134, but this one went even better because it went deep enough to the 50 to give you a good risk point off of this level, which was great. Because, again, it's all about putting your stop in a true spot. If you try to buy it right here, and you just, even if you get a hammer candle and you put your stop right below, is that really that great? It is sometimes if you use, the EMAs are good and they work strong, but if you come close to a real key level of support, it's even better, right? So you have the 10-minute 50 here. You have a very, very key support, the opening gap low, and then you have a flag, and it breaks the downtrend, right? So some people will choose to wait for the downtrend break. Hey, guys, that's the other thing. If you're, some traders will want to look for a flush close to this and just long it with their stop below. Others will wait for this hammer candle to close as a hammer candle and then long it with their stop below this or below that. I prefer to use real levels like this unless the stock proves to me first. So once the stock breaks this downtrend, if I long it on the break of the downtrend, then I can put my stop right here. But if I'm longing it before the break of this downtrend, my stop has to go right here. It's kind of just like when you're trailing your stop. I hate when I see people do this, okay? Let's say you bought this right here, all right? And you stop moving your trail up. You should not be moving your stop up until you make a new high, okay? So let's say you bought this right here. You don't touch your stop until you break this high. Once you break this high, then you can move your stop up to the most recent pullback, okay? Now you put your stop right here. Now, you don't move your stop again. You don't move your stop again until you break this high. Once you break that high right here, now you can move your stop up to the most recent pullback. Now you don't stop again until you break this high. Right here, you break this high. Move your stop up, right? You move your stop up when you make a new high. That's it. Now, you don't move your stop up until you break that high. You break that high, you move your stop up to the most recent pullback. That's the proper way to trail a stop. You don't move your stop up until the stock makes a new high. Because otherwise, what happens? This is what happens. You buy the stock, it starts to push, you move your stop up here, and then what? It stops you out. Oh, it never made a new high yet. Once it makes a new high, then you move your stop up to the pullback. Makes a new high, move your stop up to the pullback. Makes a new high, pullback, makes a new high, pullback, and that's how you do it. All right? So it's just like over here, kind of same thing, right? Let's say you bought the dip in the open. You bought the dip right here. When do you move your stop? Let's forget about this for a sec. Right here, so let's say you bought this dip when I went back through the open price. Boom, right here you bought it. You put your stop right below that level. Now, when do you move your stop? Right here. When it breaks this high. That's it. When it breaks that high up here, now you move your stop to right here. Okay? Now it starts to go again. It breaks this high right here. Move your stop. When it breaks that high, move your stop to the next pullback. Okay? Now it's going again. Breaks this high. Breaks this high right there. You move your stop. Right here. Now it breaks this high. Right here. Once it breaks that high, these kind of pullbacks aren't really that great, but you move your stop right there, and then you got stopped out. That's it. That's the proper way to trail your stop. You stopped out right here because the stock made a new high and pulled back to the previous pullback point. That's the real way that you should be trailing your stop, or unless you're trailing with EMAs or whatever, I don't know. But if you're using price action, that is the proper way to trail your stop. Based on higher lows and lower highs, lower lows and higher lows. So, all right. I don't want to make this video too long, but thank you very much. Have a good, happy Memorial Day, everyone. See ya.